Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. Welcome, everybody. Big earnings day today. I asked a couple of my good friends who are also crazy about the market and in a lot of these companies, Jason Hall from The Smattering to join me, and Jon Quast from Working Capital JQ. How are you guys doing?
Hey, Travis. Good, doing good.
I'm excited to be on it, John. It's been a long time since you and I did anything together, so I'm really excited.
True.
Jason, you want to bring us into ASML?
Yeah, so ASML, the Dutch company that I've heard people describe their technology, it's not rocket science, it's harder. It's incredible what they do. And I think this is easily one of the three most important companies in the world in the semiconductor industry.
Can you just go over exactly what they do and how they fit into the business?
Yeah, so their lithography technology, which is essentially the way that it's the machine that creates the image that is then printed on the wafers to make the semiconductors. And they operate in this extremely high ultraviolet frequencies to do this lithography to make the image small enough. They're decades ahead of anybody else. They're absolute decades ahead of anybody else. Essentially, every single top tier, highest performance chip that's manufactured in the world is made using their equipment. They're that important. So that's the key. And this is a company that sells, and you'll see the numbers in a little bit, they sell around 300 machines a year. You'll see the numbers that they generate. And a company that sells 300 of something a year and is this important is incredibly rare. So again, it's a Dutch company, so they report in euros. We'll get into what some of these numbers mean in just a minute. But a couple things I want to call out. And again, this is the quarterly numbers here out of their slides from their presentation. Here's the full year results. Again, this is an equipment manufacturer that's getting 50% gross margins. They continue to pile a ton of their money. So again, $21 billion in revenue for the year, and they spent 15% of that on R&D. So they're not sitting back on their technology and saying, okay, let's just let the money run in. They continue to invest in maintaining and building on that lead. So a couple of key things. Again, while a lot of this in 2022 was a pretty good year for the semiconductor industry, right? So we're looking at sales for last year, and we've gone into a bit of a slowdown, which we know, and we're hearing a little bit about that. And we're seeing it in some of the companies that actually make the semiconductors or the fabless companies that design them. But basically the companies that are selling the semiconductors to somebody, their numbers are not as good as what we saw from ASML to finish the year. % revenue growth. That's wonderful revenue growth. The key is the EUV extreme UV machines revenue was up 12% in the quarter. They sold, or in the year, they sold 40 that they recognized revenue for, and they shipped a total of 54. So there's 14 that they shipped that haven't fully installed that they'll recognize revenue for in the first quarter of this year. And you see the orders continue to come in from its big customers that use those EUV machines. So that's Taiwan Semi, Samsung, and a few others. The key is that it's really growing. Their machines are not just used for logic chips, but they're also used for memory a lot. They're really dominant and have a substantial amount of market share there. Their install base grew 16%. The company's pretty mature, even though the long tail is very strong growth over the next decade, but they're really focused because it is a mature business. They're focused on share buybacks and increasing their dividend. I think they increased their dividend about 5%, bought back a decent amount of shares. Here's their outlook, expecting another good quarter and accelerating sales growth as the year goes on. Again, they're still expecting really good gross margin. I'm going to continue to spend money on R&D, maybe not as much as we saw last year. They go through phases where they spend significant amounts, but again, it's still going to be probably that 12 to 15% of revenue. But again, looking at as sales go throughout the year, looking at 25% growth, so almost double the sales rate that we saw this year. And this is important to understand the nature of their business. Again, ASML is a supplier to the semiconductor industry. So as the semiconductor companies, they're dealing with what Microsoft was talking about with their hardware sales decline. The PC business is kind of slowing. Those are things that are affecting the Taiwan Semis and the Intels and the Samsungs of the world. But what those companies are also looking at is that the expectation that by, I think, 2029 is the expectation that the semiconductor industry is going to generate about $1 trillion a year in sales. It's still at a very, very rapid growth rate. And you're going to see companies like Taiwan Semi, I keep mentioning that one, that's probably ASML's most important customer by a long shot, is going to spend $300 or $400 billion over an 8 or 10 year period. And a lot of that money is going to go to ASML for their machines. So while those companies are experiencing a slowdown, they can't not invest in having the next best models of these machines to be able to make the next chips that NVIDIA designs, that Apple designs, because that's their customers, right? They have to be ready when those companies are ready and maintain the lead that they've built in their businesses. So that's really important. I want to hop over to, and guys, I need you to tell me for sure if you can see this. Do you see the slide from the presentation?
Yes, sir.
You got it.
The bottom line here. Okay. So again, this is the lithography systems, 2018, less than 250, last year over 345. And then you look at these bookings, right? These revenue bookings numbers, they have just an incredible backlog in their business that continues to grow. And while their business will be cyclical over time, I think it's less cyclical than we see it on the end user serving side. The companies that are making the semiconductors would probably have a good 4 or 5 year run at least, I think, before maybe things start to slow down for ASML.
How do you think about value with a company like this? I'm looking at their info right now. It looks like $270 billion market cap.
It's tough, right? I'll be honest. I don't own any ASML. That's going to change soon because I've really biased myself because it tends to trade at a very rich valuation, but deservedly so. I think that's the key because it has built so many strong economic moats and it continues to build those. It's there, like with any technology, there's always the risk of some disruption that kind of comes out of nowhere.
The way that they did to a company like Intel.
Yeah, I think that's fair. And for ASML, it could be something with quantum computing, right? Where just the way computing is done changes at a fundamental level, right? So I think maybe that's the future disruption, but the need for kind of this semiconductor-based ones and zeros computing, even when we get to a world of quantum computing, I don't think goes away. I think ASML is one of those companies that it's probably always going to look very expensive. But again, like Microsoft, you look at again, this is a manufacturer like that's in the middle, right? They're not even serving the end customer, and they generate on equipment over 50% gross margins, generate incredible cash returns. It's a business that I think having some exposure to makes sense. And the stock is down. It's come back some, but it's still down double digits from its highs, and not anchoring on those highs, but looking forward. Because this is also a really good services-based business as well. It's just not the hardware they sell. They service the machines. They operate the machines in some cases. They have some really strong advantages that to continue generating really high revenue, high margin revenue for the long term. And I think it's worth owning at this price.
Jason, I agree with you on the probably always going to look like a non-value stock. Just looking at management's long-term bull case, they're saying up to 60 billion euros annual revenue by 2030.
Right.
If you look at the market valuation right now, it's trading at about 4 times that 2030 revenue number. So yeah, I would say that's extremely pricey. At the same time, I look at Chipotle Mexican Grill as a comparison here. Has there ever been a good time to get into Chipotle Mexican Grill from a fundamental value opportunity? No, it's because it's the best run business probably that you can invest in, period. There's only been brief times where it came down, the E. coli breakout, the beginning of the pandemic crash, but it was still not trading at a below average valuation to the market. It was never trading at a discount. So it was a company that you had to just kind of suck it up and invest in it, and you've made great returns because the business is that valuable. I think ASML probably somewhere in there. I'm not saying that every price is always going to make sense, but it's probably one of those companies always going to look overvalued. Go ahead and buy some, get exposure, and then if it comes down in valuation to something more attractive, add.
And there's one other thing I want to add to that too. Our friend and colleague Jose Najarro and I did a video recently. We were talking about ASML, and I applied David Gardner's snap test. Snap your fingers and the business goes away. And when I did that with Jose, he said he actually got a little scared at the thought of ASML going away.
Yeah.
And let's be honest, everything you said about Chipotle is right, but if you snap your fingers, there's other decent burritos people can find out there. If you snap your fingers and ASML goes away, nobody can make the most important semiconductors in the world.
Yeah.
Period. And that
we move back probably 3 to 5 years from a chip standpoint.
Absolutely. Absolutely.
And I want to add in a couple of just kind of strategic pieces China has been trying to do what ASML does and make their own equipment. US sanctions have basically meant that at least the leading edge equipment is not going to be able to be installed in China.
Yeah, that's like 15% of ASML's business last year too.
Yeah. Now, I think that they're probably going to be able to operate some of their legacy equipment. That's going to continue to exist, but new plants are going to not be built in China. As a result, that kind of takes a potential competitor out of the market. I mean, I think that China would love to do what ASML does, but like you said, it's not rocket science, it's harder. So they have not proven the ability to be able to make the equipment and make chips in the same way that a company like Taiwan Semiconductor is. The other thing that I wanted to add is, it's, as I learn more about this industry, I keep thinking that the basket is probably the right kind of approach, because maybe you are paying too much for ASML, but maybe Taiwan Semiconductor is cheap right now. And maybe the value kind of ebbs and flows between those two, but over time, and add a few other players in there, but over time, this is a growing industry. I think margins are going to continue to be really strong. There are going to be, it is a cyclical business. So there is a cyclical nature to it, but there is more and more recurring revenue from ASML too, because, you know, as I hear about how these plants are run in Taiwan, if the ASML employees aren't there, even as smart as the Taiwan Semiconductor employees are, they're not going to be able to necessarily run the equipment. So such a specialized field.